Sir, very good evening, Mr. Lakshman sir and Mr. Manikandan sir, and Samson sir. Sir, actually, Mr. Samson has joined as a training manager in HDFC Life, sir. So furtherly, he will continue with Click to Protect Life. Sir. Entire term plan details he will explain in this meeting, sir. Samson sir, please go ahead.
Okay, so thanks, Haripriya. So very good evening, friends, once again.
Good evening.
So very happy to interact with you people. Okay, today. So before going to the questionnaire kind of thing, so let's have a look at the term plan which we have in HDFC Life. Okay, so let me present the screen.
Thank you for your valuable time, and we really going to enjoy with the exposure and this term insurance, and hope all the viewers will get more benefit by seeing this presentation.
Definitely, thank you.
Yes.
I hope the screen is visible.
Yeah. Now
Right.
we are getting the screen. Yes.
Yeah. So as you all know, the name of the term plan that is available with HDFC Life is Click to Protect Life. Okay, Click to Protect
Yes.
Life. So it's a new age term plan. Okay, designed for our lifestyle needs. Okay, so it's a new age term plan in the sense earlier we used to have a plain vanilla term plan. Now we have redesigned and we have improvised and improved term plans. So we have so many options.
Sir, sorry for
Yeah.
the interruption. Actually, before
Yeah.
going into the term plan, first
Hmm.
users should understand why
Hmm.
we have to take the term plan instead of the normal ULIP as well as endowment plan.
Very
First,
good.
let them understand, then we can go
Hmm.
ahead with the product based.
Super.
Better to understand.
Okay.
Yeah.
So first of all, what is term plan? Good. So term plan line. So can we talk in Tamil or should I take only in English?
Better go ahead with English. Sir.
Okay, good. So first of all, we need to understand what is a term plan. Okay, why someone should take a term plan. Otherwise, actually term plan should be a pull product. If someone doesn't understand the need for taking a term plan or it doesn't understand what is term plan, then it will be only a push product. Okay. So what is a term plan? Before understanding term plan, we have to understand what is human life value.
Yeah.
Okay. What is human life value? Human life value is nothing but as long as a person earns, okay, he is considered as an asset.
Okay.
Right. Okay.
Yes.
As long as a person earns, he is considered as an asset. And second point, as long as he earns, okay, he will be having liabilities, he will be having dependents, okay, he will be having commitments.
Okay.
Correct. So liabilities, commitments, and dependents are vital part of one's life. Okay. And
Yeah.
the dependents, most importantly, first dependents are financially dependent on the person.
Okay.
Okay. If something happens to him, okay, what will happen to the dependents? How will they manage? How will they maintain their lifestyle? Will they maintain the same standard of living? How will they take care of their children, etc., etc.? These questions will come because no one knows date of death.
Yeah, sure.
Correct? Anything may happen anytime.
Yeah.
Okay. So that is the reason. Actually, there should be some provision to take care of that challenge.
Okay.
Before the discovery or invention of term plan, that was a discussion, it was going on.
Yeah.
Okay. So people can die early. Okay. If that happens, their family, no one is going to take care of their family. So we should have a provision first, provisioning. Then some of the gentlemen, they sat and they designed a solution. Okay, called the term plan. Okay, it was designed on the concept of pooling concept. Okay, so everyone contributed some money. Okay, they pooled their money and they created a fund. Okay, they created a fund and the fund stays invested as per the guidelines. Okay, if anything happens, okay, money from that particular fund is given to the deceased person's family.
Okay.
Why? Because if the person has lived for the next 10, 20 or 30 years, he would have earned some money.
Yeah.
Okay. So that would have been helpful for his family. But now he
Mhm.
is not there. So who will compensate that amount? The fund that we have taken from life fund, right? That will
Yeah.
compensate that particular family.
Okay.
Okay. But the big question is that how much insurance should one take?
Yeah.
That is important, right? Okay. So that is where the exact human life value calculation comes into play. Okay.
Okay.
So as I said earlier, okay, once human life value, okay, one person's human life value can be calculated using certain factors. One is age. First one is age.
Okay.
Second one is how much income he is earning.
Mm-hmm.
Okay. And third most important is that what type of income he is earning, whether it is an earned income or a passive income.
Okay.
That is very, very important as far as term plan is concerned. Okay. So why we are considering earned income? Because if someone is earning earned income, say for example, if he's a salaried person or a businessman,
Mm-hmm.
if he is not there, that particular income will stop. Correct?
Yeah.
So that income only should be compensated. Say for example, if someone is earning a rental income,
Okay.
okay, even if the person dies, that rental income will come to his family.
Yeah. We'll continue. Yeah.
So that is where, while before buying a term plan, we should consider the age of the person, what income he earns, and what
Mhm.
type of income he earns.
Okay.
These are the three factors that should be considered before deciding the sum assured. That means life cover of that particular person.
Okay.
Okay. Yes.
Sir,
Okay. So
why we have to select the term insurance instead of ULIP as well as the endowment? Do you have any?
exactly. Yes, exactly. So term insurance, as I said earlier, say for example, on an average, a person needs to provide for his family for 25 years. Let's take like that. Okay.
Okay.
He needs to provide for his family for 25 years.
Mm-hmm.
Assuming he is earning, let's take 10 lakh per annum. Okay. So if he is earning, if his capacity is 10 lakh per annum, then for next 25 years, on an average, his family needs 2.5 crore amount earnings from him. Correct?
Correct.
For next 25 years.
Mm-hmm.
Now, only in term plan, okay, he can get that particular life cover. That means 2.5 crore life cover. He may get the same life cover in a ULIP plan or in traditional plan also, but the premium will be very, very huge.
Okay.
Only in term plan for the same life cover, for the same sum assured, customer can pay relatively lesser premium.
That is more
Say for
important point actually.
that is
Yeah.
more important.
Yeah.
Say for example, on an average 40,000 or 50,000 premium, some can take 2.5 crore sum assured.
Yeah.
But for the same 2.5 crore sum assured,
Mm-hmm.
if I want to take in ULIP or a traditional policy, I need
Mm-hmm.
to invest on an average of 25 lakh per annum. 10
Yeah.
times coverage.
Yeah.
Minimum 25 lakhs per annum. So not very many people could afford that. Right?
Right.
Practicality. It all depends on practicality. Doesn't
Yeah.
mean that we should not take 22.5 crore through ULIP or traditional, but it
Mm-hmm.
is not affordable to most of the people.
Right. Mm.
Yeah. So that is the reason why someone should prefer a term plan. It's a relatively it's a cheapest plan, very simple plan.
Okay.
Okay.
Yeah.
Good. Yeah. So shall we move on to product now?
Yeah. Better. You can go ahead with your product
Super.
explanation.
Super. Okay. So now having said HDFC Life's click to protect life has three options. Okay.
Mm-hmm.
Customer can select any one of the three options. Okay.
Okay. Mm-hmm.
The first option gives you a plain vanilla term plan, vanilla cover. That means plain cover, no inbuilt benefits, no inbuilt riders, nothing.
Yeah.
Customer should choose a policy term. He should choose a premium payment term. Okay, so whatever the eligible human life value, according to that, he should choose a sum assured.
Okay.
For that sum assured, when we take a benefit realization, there will be some premium mentioned for him. so he should pay for that premium. Okay. If everything goes on well, if nothing happened during the policy term, nothing will be given back at the end of the policy term.
Fine.
Again, if anything happens in between the policy term, whatever the life cover we have taken, that is sum assured. Okay, that will be given to the nominee and the policy closes.
Okay.
That is a plain vanilla term plan, and all the life insurance companies should have this term plan. All the
Okay.
insurance, that's a mandate.
Okay.
All the insurance company, life insurance companies will be having a term plan, plain term plan.
Mandatorily, they should have.
Mandatorily, every insurance company should have the term plan. But again, having said this, not very many companies can effectively sell the term plan. That is also very important.
Yeah.
A term plan is a tricky product. Not every company can sell this effectively. Okay, right. The second option, that option name is called as income plus option. Okay, so income plus option is just a variant. Okay, just a variant of a term plan. So variant of the term plan in the sense, so you can remember. Okay, some of the people asking, so what will happen if I survey through the policy term? There are person who are asking, right?
Yeah.
Actually speaking, that is the question that should not be asked while buying a term plan, because while buying a term plan, we are considering the risk of dying early. There we should not ask the survival, discuss about survival.
True.
Okay.
Yeah.
But anyway, some of the customers are asking, say for example, if I survive through, what will happen? So normally we used to say that, sir, you can choose a return of premium option, wherein if you survey through the term, all the premiums paid by you will be returned back to you. Okay. But we have come up with a more innovative variant. Instead of giving a lump sum as a return of premium amount, why not a regular income? After survival up to certain age, why not I give a regular income to him?
Okay.
Okay, so they thought in that way and they designed the income plus option. So we will see in detail. Okay. Yeah. So third one is that auto adjusting critical illness and life cover. That means I will be having life cover, but at the same time, as age increases, I need some provisioning for the health cover also. Correct? Health is also very crucial. Okay. But the challenges, taking health policy at later age is very, very challenging. Okay. Premiums cannot be affordable premium, and customer needs to go n number of medical tests. Okay. And there is no guarantee that the premium will not change further, because as you all know, in health insurance, there is a provision that every 3 years premium can be changed. Okay. True. Based on the changes in the morbidity rate, they can change the premium. So these are some of the challenges in health insurance. So we have come across with a variant wherein, okay, customer need not take a separate health insurance critical illness plan. Okay, but in term plan option itself, okay, he will be having a critical illness option, that too increasing critical illness. That means as age increases, okay, he will be getting increased critical illness. Okay. But at the same time, life cover will be coming down. Okay, and there is a reason for that, why life cover comes down and critical illness cover increases. So while going through the option, I will explain that. Yeah. Okay.
Sir, if possible, you can just make a full screen of your PDF. Go and view the view.
Yes. Yeah.
Yeah. Now it's okay.
This is a full screen. Good.
Yeah.
And we also have some add-on options. Okay. So waiver of premium on critical illness. That means if he is diagnosed with any of the listed critical illness, further premiums will be waived off. Nothing will be given as a lump sum, but further premiums will be waived off. Okay, that option is there as an add-on option. Customer need to select that. And we do have accidental death benefit, ADB rider, that is also available as an add-on, and whole of life cover is also available as an add-on option. Okay, customer can choose if they want to. And then there is some flexibility. So flexibility in the sense, so they can reduce the premium payment term from regular pay to limited pay. So normally most of the people choose regular pay. Okay, after some time, if they feel that, so why should I take this commitment for 10, 15, 20 years? Let me finish off the commitment. I have received um, some amount, some lump sum amount, windfall gain. Okay, why not I close the commitment? See, please understand here, completing the commitment is important. So you should, here people should not calculate what is the returns. Okay, if I invested in elsewhere, what will be the return? I would have invested that money in some other investments. I would have received something. That is not the question.
Okay.
Here, completing the commitment is the question. So someone wants to complete the commitment. Okay, so instead of extending the premium payment term for 10, 15 years, I am going to complete my commitment earlier. Okay, of course. Okay, of course. From his point of view, he is paying the premiums upfront. There's no doubt on that. He is paying the premium upfront. But what is the probability of completing the commitment? So when I am earning, I want to complete the commitment. There are people like that. Okay. As long as I am earning, I can pay the premiums. But if anything happens to me, okay, unemployment or any disability or disease, okay, I may not be able to pay the premiums at that point of time. So due to these reasons, some people want to complete their commitment earlier. So we have given them the option to change the regular pay to limited pay. Again, it is 100%
what is your recommendation? Precisely speaking, what is your recommendation?
So if you have asked this question some 15 years ago, okay, if you have asked this question 15 years ago, I would have told you to go for regular premium only. Okay. But nowadays, business dynamics, okay, employment dynamics have changed. We cannot predict how long we will be working. That is the real challenge. So it is always better to finish off the commitment as early as possible. If there is an option to finish the commitment, finish it off. Say, for example, I have planned to educate my child for next 18 years. Okay, just an example. But every year I need to pay the school fees or tuition fees to the school, correct?
Okay.
Now the school has come out with an innovative option saying that you can pay them the X amount. Okay. So if you pay that X amount, we will not be asking you the tuition fees for the next till the +2. If you are the parent, will you opt for that option? We will think of that option, right? We won't outrightly reject that. We will think. Okay. Okay.
But when I go through the lot of documents and books and a lot of financial advisors recommendation, they are recommending to go with regular pay. So there is a backup reason. I don't want to discuss in that forum, but later we will discuss for that if you want it. And yeah, there are certain pros and cons is there for limited pay as well as the regular pay. But most of the expertise are recommending to go ahead with regular pay because after 5 years, after 10 years,
even
something went wrong.
Yes, even I will also recommend you to go for regular pay because if someone goes for regular pay, the comparatively premium will be very less. It won't look like a burden for them. I do accept that. Even I told you, no, I will always recommend regular pay only. But employment dynamics has changed, sir.
Yeah.
That you should understand. So you cannot expect the people, how many people will be earning for next 10 years. We cannot say that. So if there is an option, that is the major reason. Uncertainty is always there. Okay, that is the only reason. Otherwise, as you think, as I think, okay, I will invest the amount in a mutual fund or I will buy a stock or I will buy a land or something like that and it will grow into X or Y amount. I do know that.
Yeah.
Okay, practicality is important. Okay. So next 5 years, in the year 2027, will I be working? That is the question we have to ask. In the year 2027, will I be working? Will I be earning? There's always that 50-50 probability, right? That is the reason. Otherwise, it's not bad to, Lakshman sir.
Sorry to disturb. There is, I want to add one more point here.
Yes.
There is one more thing that like a grace period. If one person while paying the premium fee forget to pay on or before the grace period, then his policy can be lapsed. If anything
Yes.
happens, that is another issue. So it's a purely depends upon the guy who is going to take the policy. Oh, my one more suggestion on this: let him complete the presentation. Then we have a questionnaire, right? We will ask all the possible depth questions,
Oh,
each
yeah,
and every
definitely.
possibilities.
Yeah, definitely.
Yeah, please go ahead.
So the name of the option, the plain term plan option is Life Protect. Okay. So on the income plus option, we already discussed. So plain vanilla term plan option name is called as Life Protect. Okay. And the income plus is there. And that critical illness and life cover auto balancing option is available in a different presentation. We will have a different presentation for that. Okay. Now let's see the plan working. So as I said earlier, Life Protect is a plain term plan. Okay, very easy to understand. So one has to choose a policy term, premium payment term, choose the sum assured based on his HLV, choose the premium based on the premium payment terms. Okay, pay the premiums regularly. That's all. But here one suggestion. So normally people will be asking to go for 85 years or 100 years life cover. But believe me, okay, one need not take term plan for 85 or 100 years. See, this is where we have to understand the need for a term plan. So one needs a term plan as long as he has liabilities and commitments or dependents. Please tell me, at the age of 75, how many people will have their own liabilities and commitments? They won't be having dependents also. Maybe he or she may be having spouse with him. That's all. His children would have been settled. Okay. And no one will have commitments or liabilities at the age of 70 or 75. So it is always advisable to have up to 75. That is enough as far as term plan is concerned. No need to go for 85 or 100 or nothing. Okay. But if the option is given for health cover or retirement, then you can go for the maximum term. That is a completely different product.
Okay.
Understood? Okay. So choose a policy term, premium payment term, if anything happens in between the policy term. Okay. Death. So death happens means whatever the sum assured we have taken, no, that will be given to the nominee as a death benefit and policy closes. As simple as that. Plain vanilla term plan. Okay. Every insurance company, life insurance company will have this kind of plan with them. Okay. But advantage is that we have limited premium payment term options, 5, 10, 15 add-on options you can take for whole life also. Okay. Yeah, it is up to the customer's wish. Okay. Normally we won't go beyond 85. Even 85 is also a huge age. 75 is enough. 75 is enough. Okay. Good. So any doubts in this?
The person probably around 60, they are going to stop the earning, almost the retirement age. Yeah?
Yes.
The term insurance primarily to protect the person while earning the duration.
Yes.
So after 60th year, there is no earning. Then why the person is protection is required after 10 years? Do you have any reason for that?
Yeah, that is the reason I'm saying. If someone wants a protection plan after 60, age 60, then he should have a valid reason. Say, for example, someone would have taken a loan at the age of 55 and he would have taken a policy loan term of 15 years or 20 years. Let's assume like that. In that case, he has a liability now.
Okay.
Then he has to go for any provisioning. So term plan is a cheaper way of giving a provisioning. That's all. But if someone doesn't have any liability, say for example, one doesn't have liability and he also doesn't have any dependence.
Okay.
Take in that case, then why should he need term plan?
Okay.
There is no need for a term plan.
Not required actually.
Not required. Not required. Okay. Good. So then let's go for income plus option. So it's also an innovative option. Okay. Keeping in mind that one needs retirement income after 60 more than the life cover. So the same logic what we discussed. So, okay. So more than the life cover, one needs a retirement income, right?
Yeah.
Okay. So here after 60th age, okay, this plan is designed in such a way that after the 60th age, whatever the sum assured he has taken. Okay.
Okay.
0.1% of that sum assured. That is called base sum assured, BSA. In this case, we have taken 1 crore sum assured. 0.1% comes to 10,000 per month. Okay. Yeah. So from 60th year completion, okay, that's 0.1% of sum assured. That means 10,000 per month. Okay. He's given every month. Okay. Till the end of the policy term.
Okay.
Okay. Till the end of the policy term or until death. Okay. Because logic behind is that after 60, he needs income. Actually, the income what he needs after age 60 should have been taken from a retirement plan. Correct?
Yeah.
Yeah. But now in this option, we have imbibed that. Okay. By merely taking a term plan, you will be getting some retirement option also. Okay. So if he survives beyond 60, every month he will be getting 0.1% of sum assured as monthly income. Okay. And survival. And if he dies after that, after some years of receiving monthly income, if he dies, okay, so we will deduct the amount already given from the sum assured. The balance amount will be given to the nominee as death benefit. Okay, it is one of the most popular options. Believe me, this is one of the most popular options. People are willing to pay some extra premium also in this option.
So the extra means how many percentage we have customer has to pay for to take this option probably.
Actually, we cannot determine the increased premium in a percentage wise because as you all know, it all depends on the age. Okay, what is the sum assured he has taken, policy term, premium payment term. Okay, so it is always suggested to take a benefit illustration. Okay, so benefit illustration before coming into conclusion. So life insurance is a complex product. We have to accept that. Okay. Okay. So here fixed term options also there and the whole of life option is also there. Customer can choose according to in this option, customer can choose whole of life or 85. Why? Because if there is a probability of survival, he will be getting income for longer period. Okay. In this option, they can go for 85 or whole of life. We can give.
Right.
Right. Good. So plan eligibility, as you all know, for whole of life option, minimum entry age will be 45 for whole of life option. Okay. Any product for whole of life, minimum entry age will be 45. Okay. So if it is a fixed term variant, only for income plus option, we are restricting to maximum of 40 years. Under maximum policy term in fixed term. Income plus, you can see 40 years is the maximum term. Okay, so these are the two areas where you should concentrate. Okay, these two in the rendu vision. Okay, for whole of life, minimum entry age is 45, and for fixed term in income plus option, maximum policy term allowed is 40 years. That means if a person's age is 30, the minimum entry age is 30 there. Okay, if minimum entry age is 30 mean, then he can take only till the age 70. It cannot extend beyond 70. Okay. So better to take illustration before talking to the customer. It is always better. Okay. So any doubts in this option?
For the eligibility, there are I heard some other options also. The person should have some minimum of 5 lakhs like this. The salary should be. Can you explain me the?
Yes, that is an underwriting guidelines. So as I said, term plan for a comparatively lesser premium, I am giving a higher coverage, right?
Yeah.
Okay, so that is why all the companies' term plan will have their own underwriting guidelines. Okay, so minimum income should be there. Even some of the variants you can see that they will be asking whether you are a graduate or not. Okay, so why they are asking whether it's you are a graduate or not? Because only if they are graduate or above educated, the probability of earning a earned income is higher. So it is not like that the person who has completed a diploma is not earning. That is not like that. Because in term plan only we are asking these questions. not in savings plan.
Yeah.
In savings plan, it's as a whole income. That's all. However you earn. Only in term plan, we are asking for earned income. Okay. For salaried person, we have some certain limitations. Okay. For non-salaried, that means self-employed and businessman, we will be having certain limitations.
Okay.
But only salaried person and self-employed businessman can take a term plan.
Okay. Salary means what is the limitation, sir? Do you have any data with you?
Yeah. So we can start from, in Indian rupee, we can even start from 4 lakh per annum.
Okay. Minimum.
And, yeah, 4 lakh per annum we can start. Okay, we can have minimum sum assured.
Okay.
And very lately we have come up with a package kind of thing also. Hope Haripriya would have told. Package. We will be having life cover, accident death benefit cover, disability cover, and critical illness cover.
That is a rider
Package.
along with
riders along with riders.
vanilla. Yeah.
Vanilla. Okay, that can also be chosen. Okay.
Okay.
Okay. Good. So can we go for third option?
Yeah.
Rebalance.
So your screen is not sharing now.
Yeah, I will share now. Yeah, I'm sharing.
Yeah, okay.
Now. Yes. That's a separate presentation.
Okay.
That is why.
Haripriya madam, your screening is completely shaking. Just keep a standstill position to.
Now clear, sir.
Yeah, it's clear, but it is shaking continuously.
Okay, okay, yeah.
I hope the screen is visible by this time,
Sir,
right?
make it full mode, sir. Full
Yeah,
mode.
I will. Okay.
Yeah, fine.
Okay. The name of this particular option is life and critical illness rebalance. Okay. So before going for this option, we need to understand why critical illness option should be taken along with the term plan. Okay. Because here both life cover and critical illness cover is there. So why should we add a critical illness cover to a life cover? There should be some reason behind that, right? We have to understand that.
Yeah.
So we all know health inflation in India, particularly. Okay. So predominantly most of the people depend on private healthcare only, correct?
Yeah.
So no one is depending on the public healthcare. So as long as someone depends on private healthcare, you all know that the cost of health will be care treatment will be much higher. So in India, it is very high. Okay, if you take any state, okay, it ranges from 10% to 25%.
Okay.
In the right side screen, you can see in the x-axis, y-axis, you can see that. Okay, very high, and it is very dynamic also. Very dynamic. If at all, if there is any new technology, new machines or new sophisticated machines were discovered, then immediately the inflation increases. The cost increases.
Of course.
That's a major challenge. It's a major challenge. Okay. So, and also cost of treatment for major critical illness, cancer like cancer, kidney transplant or heart surgery, brain tumor surgery, they are very high. Okay. And most importantly, it also depends on the hospital. Correct. Okay. If the hospital is in metro city, then the cost will be much higher for the same treatment. Okay. So considering these factors, okay, and then there is one another factor that is called as why. So that is the need for rebalancing cover. So one is we have seen the risk of critical illness, right?
Yeah.
So this critical illness risk will be lower in the low age group. That means if someone is in the age group of 25, 30, 35, 40, the risk of critical illness will be very low. Correct? Naturally.
Sir, your screen is flickering. I don't know the reason. Lakshmanan, is it okay for you or for me it's a problem?
Flickering. My screen actually is not flickering. Okay. Now?
Now it's okay, sir.
Okay, good. So when the younger age, when at the younger age, the critical illness risk is very, very low. We all know that. Okay.
Yeah.
But as age increases, the risk of critical illnesses increases. It's a quite natural thing. Okay. Natural wear and tear is there. So obviously risk of critical illness will be higher.
Okay.
But in one's life stage, when the person will be having higher liabilities and commitments and dependence?
In the early age.
At the younger age, right?
Yeah.
Younger age only, he needs to educate, he needs to take care of his family, he needs to educate his child.
Yeah.
Okay. He needs to buy a new house, he has to take liabilities, loans, car loan, etc., 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 everything. So we need to balance these two things. So we already discussed that term plan is used to compensate the income for as long as one has the liabilities and commitments. Okay. But at the same time, critical illness cover should be there when the person's age is higher. So we are going to rebalance those two things.
Okay.
So as age increases, since I will be having lesser liabilities and commitments and responsibilities, my life cover can be lower. It doesn't mean that we should not have life cover. My life cover can be lower. But at the same time, I need to have a higher provisioning for health cover. That means my critical illness cover actually should be increasing. Correct?
Okay.
As age increases, right? So my critical illness cover should increase.
So to
there is a
mitigate the risk
proportion.
in the old age.
Okay. So in this particular option, we are doing that. So we are introducing life and critical illness rebalance. So as you can see here, we cover 36 listed critical illnesses. So normally in a critical illness rider, we cover only 19 critical illnesses. Okay. But in this particular option, we cover 36 critical illnesses. Okay. 36 critical illness. And then auto balance, as I told you, no, as age increases, life cover keeps on decreasing and proportionately critical illness cover will keep on increasing.
This is amazing, actually.
Very, very,
yeah.
yes, very, very attractive. But when someone takes the policy, at the time of taking the policy, this life cover and critical illness cover will be split into 80-20 ratio. That means 80% will be life cover, 20% will be critical illness cover. Say for example, if it's 1 crore cover means 80 lakh will be for life cover, 20 lakh will be for critical illness cover.
Okay.
Inception, at inception. Whatever the sum assured percentage is 80-20.
Okay.
Okay. And as year moves on, okay, this ratio changes. This ratio changes, but there should be some formula for that, right? And this is the formula. Okay. In the fourth point, they have given that, right? Formula. 30% of base sum assured divided by the policy term. That is the formula. So if you take the example which is given in the left side of the screen, we have taken the example of 1 crore sum assured and policy term of 20 years, correct?
Okay.
Okay. So 30% of base sum assured comes to 30 lakhs, correct? For 1 crore sum assured, 30% comes to 30 lakhs.
Yeah.
So divided by policy term means divided by 20. So 30 lakhs divided by 20 comes to 30 lakhs divided by 20.
That's right.
So 1.5 lakh, right?
1.5.
30 lakhs divided by
1.5.
20. It's 1.5 lakh, right?
Yeah, 1.5.
So this 1.5 lakh, we can see the decrease in this decrease in the life cover. The same 1.5 lakh will be increased in the critical illness cover every year.
Got it.
Yeah. So every year life cover decreases by 1.5 lakh and the critical illness cover increases by 1.5 lakh.
Okay.
Now the most important question. How long will the critical illness cover increase? There should be some restriction, right?
Yes.
Okay. So it can increase up to 49% of base sum assured.
Okay.
That means if 1 crore is the life cover, it can increase up to 49 lakhs. So that is why in the example in the left side, you can see it stops at 48.5.
Yeah. It's
So next will be 50 lakhs. No, so we cannot give 50 lakhs critical illness cover. It stops at 40. So 49% of till it can increase up to 49% of base sum assured. Okay. So what is the benefit here? Higher critical illness cover with the increase in age that we cannot expect in any other product. Okay. So every year by default critical illness cover will keep on increasing. Okay. So as you all know, we are giving lump sum payment on diagnosis of any covered critical illness. Lump sum will be paid. Okay. And most importantly, inbuilt waiver of premium is also there. That means after giving a amount lump sum payment on critical illness, we have life cover no pending.
Yeah.
For that life cover, customer need not pay the renewal premium. So premium will be waived off.
Henceforth.
Okay. And life cover continues till the end of the policy term.
Understood. Okay. Go ahead.
Okay. Yeah. Let's see in working and then we will complete this. This is the plan working. So in this case, a gentleman aged 40, he has taken 20-year policy term. Okay. And he was paying regular premiums. Okay. He has chosen to pay regular premiums. So in the 10th year, while paying the premiums, okay, he was diagnosed with critical illness. Okay. So at the 10th year, the balanced critical illness comes to 33.5 lakh as per the formula.
Okay.
At the 10th year, life cover is 66.5 lakh and the critical illness cover is 33.5. Okay. So that 33.5 lakh lump sum is given to the insured person itself. Okay.
Understood.
Insured person. As I said, all the future premiums are waived off. That means life cover continues. The balanced life cover continues. Okay. And if at all, for any reason, okay, if a person dies, okay, whatever that balanced sum assured is there, no, that will be given to the nominee as a death benefit. That will be given to the nominee as death benefit and the policy closes.
Okay.
Understood?
Okay.
Yeah, understood.
Yeah. So very, very innovative option. Premium will be slightly higher, but still people are willing to pay for this. So these are the listed covered critical illnesses. There are 36 critical illnesses, as you can see here. Okay.
Yeah.
36 critical illness. So normally we don't have this much critical illnesses. Now in this particular option, 36 critical illnesses there. Okay. And we do have return of premium benefit in this option. That is a highlight. Even in the life and critical illness rebalance, we have return of premium option. So some may ask, no, what will happen if neither the critical illness nor death happens? Okay. Even in that case, if he has chosen a return of premium option, all the premiums will be returned back. Okay. All the premiums will be returned back. So as you can see, one plan, 3 benefits. So lump sum benefit on diagnosis of critical illness, life cover continues without paying any premium. And lump sum payout to the nominee in case of death during the policy term. And also, okay, one can get total premiums paid, get back total premiums paid if he survives through the policy term without any critical illness. Okay. Very, very innovative plan. Yes.
So it's a lump sum payout or it will be on monthly basis?
Which paid? So critical illness payout, right?
Yeah, critical illness. Yeah.
Critical illness. Yeah.
If neither critical illness or not death happen, how we will get the settlement after the policy?
Yeah, return of premium is a lump sum amount. As soon as the policy term ends, we have to give back the premiums, total premiums paid.
Yeah, okay.
It's a lump sum amount only. Okay.
Yeah, okay.
Yeah. Yeah. Shall we move on to eligibility conditions? This is the eligibility condition. Okay, as of now, minimum entry age is 18, maximum entry age is 60. Okay. So,
okay.
See, this particular option is designed during the COVID time for your information. So there may be some restrictions as far as this particular option is concerned. Okay. if COVID situation eases, okay, the eligibility conditions may be changed, okay, in future. Okay, so as of now, maximum policy term is 30 years. Okay, sum assured for return of premium variant, we can start from 20 lakhs. For non-return of premium variant, we can start from 50 lakhs and extend up to 2 crore as of now. Okay, so as usual, premium payment frequency can be either annual, half-yearly, quarterly, or monthly. Okay. I hope this particular option is clear for you people. Right? Any doubts on this?
Yeah, it's very clear, sir.
Yeah, there is a separate underwriting guideline for this particular option. Later on, I will share it with Haripriya so that she can also share it with you. Okay.
Okay, sir.
Yes. Okay.
Now your presentation is over, right, sir? We can go for the question
Yeah, you
session,
can go
right?
for Q&A session. You can go. You can ask the question. We can start.
Yeah. Thank you, sir. Thanks for the good explanation, detailed explanation.
Okay.
It hopefully it will clear all the doubts people have.
Okay.
Now we will go for the question session. The
Okay.
first questions I will ask some from the basic. What is the difference between term insurance and health insurance?
Very good question. Okay. Term insurance deals with the life cover. That means if he is not there, who will compensate his income? For that, we will be taking a term cover. Okay. So we deal with mortality, the probability of death. Okay. So in term plan, we deal with mortality, that is probability of death. So that is why if someone dies early, okay, how can I compensate his income to his family? So that is the term plan. Health plan is, say, like mortality. In health plan, we deal with morbidity, the probability of getting infected by any disease. That is morbidity. Okay, morbidity is more dynamic. Okay, so that is why in all the health insurance policies, after 3 years, there is always a clause that which says that there can be change in the premium. Okay, it takes care of the health care expenses when one is diagnosed with any illnesses. That is health insurance policy. There are two types of health insurance policy. One is fixed income, fixed health return health insurance policy. Another one is indemnity based health insurance policy. Okay, fixed return policy will have a defined sum assured, like critical illness. It will have a defined sum assured. Whenever we are diagnosed with any illnesses, that lump sum amount will be given to the insured person. He has to take care of any other hospital related expenses. Nothing will be given to the hospital. But in indemnity based health insurance, nothing will be given to the insured person. Okay, whatever the eligible treatment amount, that will be given to the hospital or healthcare treatment locations. That is indemnity based health insurance. Okay, so indemnity based health insurance is little bit costlier. Fixed term health insurance is little bit cheaper for the same sum assured.
Okay.
Yes.
Can you refer any policies for these two difference in HDFC, sir?
Yeah, in HDFC we have life cover, term plan for life cover. Click to protect life. So life protect option is the best suited option. But as far as health policy is concerned, when we sell a health insurance policy in a life insurance company, there are certain restrictions. That means we cannot sell as a standalone health insurance policy. We have to tie up with any existing health insurance company for their product, and it should be sold as a combi product only.
Okay.
It should be sold as a combi product. This is indemnity based product. As far as fixed fixed sum assured product, we need not tie up with any health insurance company. Like our cancer care, cardiac care. Okay, there are fixed sum assured product. We need not tie up. But when it comes to indemnity based product, as of now, we have tied up with the HDFC Ergo. Okay, and we are giving a combi product. Thin combi. The name of the product is thin combi. So we will have a term insurance there, little bit of term cover, and then health policy. So both will be combined and will be sold as a combi product. Okay.
Yeah. Okay, thank you, sir. I will move to the next question.
Okay.
Generally talking, people
Hmm.
usually have a mental block or negative thoughts to take term insurance.
Yes.
How to resolve it? How to engage the people or motivate them to take term insurance?
Yes. So the most of the people, so what they do is that before explaining what is term insurance, why term insurance, okay, they are pitching the product. That's where the problem lies. So first of all, you have to explain him what is a term plan, okay, and why term plan, why it is needed. If we are explaining these two things clearly, most of the people will understand the need for the term plan. That is a major challenge we have. Okay. So everyone needs to take care of their family. If someone is not there, they want someone to take care of their family. But it is all depends on how you explain to them. What is a term plan? Why someone needs a term plan? These are the two things one should have in their mind before pitching a term plan. We have to explain these two things. So 9 out of 10 will definitely understand the need for taking term plan. Because no one has date of death. They cannot deny that. Right? Yes.
So okay, so once people convinced, like
yes,
like any theories, the theories will applicable for the universally. It's common to everyone, right? Like
yes.
any in term insurance, can we provide them like universal product? This is universal. You can follow this one and take like this. Is there anything in the term insurance? It commons to all. It applicable for everyone.
Yeah. So as such, term insurance is a common insurance. It's a global insurance for your information. In every country, you will be having a term insurance. They will be having a term insurance. By design itself, a term insurance is a global product. Rest of the other products, usually traditional plan, other traditional plans, endowment plans, there may be so many variants. But there is no variant for a pure vanilla term plan. All the countries will have the same kind of term plan. If it's a pure vanilla term plan, no inbuilt benefits. They should choose a term. They should choose the sum assured. They should choose the premium payment term. If death happens, sum assured will be given to the nominee. That's all. It is a global variant.
Thank you, sir. Thanks for that. Sir, in the term insurance, can we change the nominees in between? Like
yes. So Insurance Act 1930 has given us the provisioning for changing the nominee anytime during the policy term. Okay, so n number of times they can change the nominee as long as the product is not assigned. Okay, it's not assigned to anyone, or it is not assigned in the MWP Act. Okay, so we can change the nominees n number of time.
Okay. So how to they can change it this nominee through online, or they need to approach the advisor?
Yeah.
How is it done actually?
Yeah, it can be done in multiple ways actually. If they have my account with them, so if they are registered with the my account, they can change themselves. They need not go to office. They need not require anyone's support. Okay, nominee change can be affected through my account itself. Okay, or they can approach their agent also or advisor also.
Okay. I think you answered for this question. Anyway, I will repeat it. How unorganized sector employees can be protected?
Yes. So in India, okay, since we privatized our insurance only 20 years ago, okay, till then there was no social security for the unorganized sectors, as you said. But now there are so many ways that we are taking care of the unorganized sector. Even in life insurance companies also, there is a mandate that they should have a product which caters to those kind of people. Say, for example, like micro insurance or the traditional endowment or savings insurance with minimum premium. So we have as low as 5,000 premium product. There are products called Uday and Pragati, wherein we have annual premium as low as 5,000 per annum. Okay, so every company will have such kind of products, and they should have. Okay, and there is a separate micro insurance for the unorganized sector, just like a group insurance. Okay, for very low premium, they will be having a life cover. Okay, that is also available. You can take.
Okay, sir.
Lakshman, is it available in HDFC for the income people? For example, as you said, for the eligibility criteria, less than 3 lakhs people, do you have any such product
Yeah,
with you?
we have savings plan called Pragati and Uday. Okay. So these are endowment plans, participating products, wherein we'll be having we have maximum, so minimum premium is as low as 5,000 per annum.
Oh, this is new for me actually. I'm not aware
Yes.
of this product.
Most of the companies will have such kind of product, but many of the companies were not promoting.
What is the reason, sir?
See, normally the promoters are the people who sells policies, right? So you would have understood by this time.
Yeah, got it. Fine. Yeah.
Okay.
Yeah.
Okay. We'll move to the next question. So, what is the difference between the online term insurance or offline through employer agents?
Yeah. Before going for online term insurance, so we should understand what is online first of all. Okay. So as I said, in India, insurance is very, very, very young. Okay. So our population is huge, very diverse population also. Okay. From company's perspective. Okay. From company's perspective, if I want to cater to all types of people, okay, my distribution model should be very, very vibrant. As simple as that.
Yeah.
Okay. So I can sell through agents. That's an agency channel. I can tie up with the corporate agency like banks or NBFCs or microfinance institution. I can sell policy. That is one type. I can also tie up with some established brokers and I can sell the policies. I can tie up with some of the group companies and I can sell the policy through group insurance. Likewise, selling insurance product through online is also one of the distribution model. That's all. Okay. There may be some people who may feel it easier to buy a term plan or buy an insurance plan through online mode. It may be very negligible, percentage may be very negligible, but from company's perspective, as I told earlier, from company's perspective, I want to get some mileage out of that. That's all. So I am also having an online platform.
Okay.
But percentage is very, very negligible. It's too early in India, too early, but in 10 years down the line. Okay. So online channel may become much more attractive for the people, but not.
But most of the guys were interested to take from the online. Will you recommend for that or go through the channel via agency?
Yes. So as of now, as I told, in India, insurance is at a very nascent stage. Okay. Particularly for online purchases. Particularly insurance. See, most of the people doesn't even know the need for insurance. First of all, if someone is buying something from Amazon, okay, they know what they are going to buy.
Yeah,
so they can buy through Amazon or through a supermarket, whatever way they can. Correct. But insurance is not like that. We have to ensure that customer understands his need first of all. Only then it should be sold, right? But the challenge lies is in understanding the need. So most of the people doesn't understand the need. We have to spend considerable time with the customer to ensure that he understands his need first. Leave alone the policy. Policy is a tool. That's all. First, he needs to understand that need. No, that cannot be done through online mode. So the risk lies with the customer itself, just like mutual fund investment or stock investment.
Okay.
If you choose as the right plan, then everything will be smooth. But if you choose as the right plan, there will be no one to support you. That's all.
Yeah, the support will not be available after taking the
Will be
policy.
available.
That is
Yes,
practically.
that is the practical thing.
Yeah, better to avoid from online.
Better to avoid online. Time
For-
being, at least for next 5-10 years, it is better to avoid buying anything, particularly insurance from online.
Okay.